We're discussing directional bias. So, what do you understand by directional bias? Let me throw the question to you. Let me know in the comment section. Okay, so directional bias, in a simple term, it's just talking about what where the market is heading to. That is directional bias. Now, the difference you have in directional bias between traders, where what one traders will be looking at the market in a bullish scenario, and the next person is looking at the market in a bearish scenario. That is what different directional bias. But overall, in this class today, I'm here to actually what explain the proper way to actually what understand the directional bias of the market, to actually understand the trend, how to take that trade in favor or in line with the directional trend of the market. So let's go down to looking at some of those factors that will help us to actually what understand the directional bias while looking at what the trade setup. Number one on our list for factors to actually look at for while looking at for what directional bias on the chart is what number one is multi-time frame analysis. So when we are talking about multi-time frame analysis, we are trying to look at what this chart from what different time frame, where you have to look at from what maybe the monthly, weekly, daily, 4 hours down to what maybe your entry time frame. So this helps you to actually what understand where the market is heading to. I don't know if you understand that. Okay, so let's take for example, let's get to look at a diagram. So let's assume something like the market was kind of like on a downtrend, and this was the last high, and you have a push up breaking above this point. After having this break above this, what you want to see is what market returning back to this zone before what continuing to the upside. As this market is continuing to the upside, let's assume this is what maybe the daily. On the daily, you can't actually wait for this market to pull back all to this demand zone before you actually look out for buy. As the market is pulling down, you'll be getting somewhat maybe entry confirmation as the market is pulling down. So all of this is what will actually what help you to actually understand where the market is heading to and why you should actually what look for buys or sells on that setup you are looking at now. So that is what multi-time frame analysis, trying to look at what the daily is saying. Does it tally with, does the 4 hours tally with the daily? Does the 1 hour time frame gets to actually tally with the daily time frame, what the daily is showing on the chart? So the next thing we'll be looking at what we must have a valid break of structure or change of character. Now, how do you get to know if you're still in a continuous sell or continuous buy? If the trend is still bullish or bearish, it's when you have a valid break of structure or a valid change of character. The next thing we'll be looking at what market trend. Is the market trending in a bullish or in a bearish trend? So how do you get to explain, or how do you get to find out that? I'll be explaining that in the next slide with some examples. The next we'll be looking at for the last factor is what is that presence of liquidity. Now when we're talking about liquidity, let me take all of this off. So talking about liquidity, so when you're talking about liquidity, because a lot of persons actually think that when you talk about liquidity, you're only talking about liquidity before your order block or before your supply zone. Let's say for example you have something like this. This was an inducement, price pulled up, and a lot of people think this is the only liquidity you need to actually take this trade to the upside. But they all forget something that when you're talking about liquidity also considered in where you place your stop losses, where you place your take profit, your entries, and all of those things. Liquidity is very, very important. So for this particular high, let's get to extend this to the upside. So having this high and having this low, you want to actually see that if this market comes back to this zone, for you to actually take this buy, where should be your target? You want to target this. Now, why are you targeting this this high. You're targeting this high because that's what there is what liquidity resting at this point. I don't know if this makes sense to you. There's liquidity resting at this point. So that's why you're actually putting your target at this point. And if you have some high at this point before year, you can decide to actually put this take profit at this point before market gets to reverse. Because we trade from one liquidity point to the next. So now let's get down to the real chart example where I'll be breaking down this from what the daily 4 hours down to what an entry confirmation, so that next time you're in the market you actually get to understand what how to actually identify your directional buyers and get to trade in accordance to what the market trend. Alright, so here we are on GBP USD daily time frame, and I just want us to just look at this chart from what the multi-time frame analysis aspect. So here on this chart, what can you identify? First, we'll be going to mark what our demand zone. So this is what the demand zone on the daily time frame. And what can you see? Price actually what pull back into this zone before what responding to the upside. So now looking at this zone, first, was there presence of liquidity in this scenario? This point here is what our liquidity, and this is what actually validates this other block. So what did you see? Price came back to actually what clear this point. After price cleared this point, price tapped into this zone, and what did you see? We had what a push to the upside. Now, before price came into this zone, we had this high, and this was what the most protected high we had. So whatever we are doing, we should be trading to actually what take out this high. We want to see price actually what clear this high. So for now, where is our trading range on the daily time frame? This is the range, and this is what our range. So let me get to actually mark the range we'll be working with for this particular what analysis on the daily time frame here. All right, so we already have what this trading range. This one is what the swing high, and this is what the swing low. So between these two lines is where we actually have what our trading range. Because once you need to actually understand is what where is your trading range. That will actually what give you the directional bias you're actually looking at for if you're in a bullish or in a bearish market. So for now, we actually what in a bearish market all the way down to this other block, and immediately price taps into this other block, we actually what continue to the upside. So if you are kind of like in this particular setup, immediately price came into this zone and started continuing to the upside, or you'll be looking at for what buys till this high is actually what taking out, or till we get to this zone before you actually want to see what price will do. But for the fact that you actually understand what when you have a demand zone sitting at this point, you want to see price come back into this, and the first law or the first rule you want to see is what that demand zone should be able to actually what take out a new what or a previous high, creating what a new high for you, and that's what this uh, pattern actually was created at this point. So immediately price came into this zone, price responded to the upside, giving us what a new high at this point. So we now have a new high. So on the daily time frame, we now have what this as our change of character. That is on the daily time frame, and you can actually see that what price responded to the upside, came back down, pushed to the upside before giving us what at this part on the daily again. We then have what this other block, and this is where what I'll be giving you the most important detail you need, because what this is what actually what gets to actually give you what you should be expecting in the next market opening, maybe by next week, to actually understand the directional bias or what you should be looking out for on GU. So here we are on the GU daily time frame. So on the daily, you can see that what price has tapped into this, cleared this high, and tapped into what this zone. Price has currently tapped into what this supply zone here. You can see on the daily, price has tapped into this zone. We've not gone down to the 4 hours, we've not gone down to the 1 hour. Here we're still on the daily time frame. So on the daily, price has actually what tapped into this zone. So what are we looking out for? Let's take this out. So where is the last demand zone on the daily? So on the daily, this is what our last demand zone. This is our last demand zone. We want to see price come back into. So what we want to see is that either price trade from this current market price to this zone, then give us a corresponding move to the upside. But for now, price is currently reacting from what this supply zone. So let's step down to the 4 hours. Let's get to actually what understand what is actually happening within this range. So here on the 4 hours, you already know we've already marked the daily zone. So we'll step down to the 4 hours to actually see what price is giving to us. So now, looking at this chart on the 4 hours. So on the 4 hours, what can you see? We'll be looking at from this current supply zone. So you get to actually understand what we are expecting from this price. So here on the 4 hours time frame, this was the last low we had at this point. This was the last low before this market tapped into what this 4 hours demand zone. This 4 hours demand zone that gave birth to what this push all the way to this supply zone. So looking at the 4 hours now, what can you see on this 4 hours? Using our multi-time frame analysis. So we'll get to mark our supply zone here. So this is our supply zone on the 4 hours. So this is our supply zone and what extend it to this side, and what price has already what tapped into this supply zone on the 4 hour zone. So what are we looking at for, or what is our expectation? So here we get to mark our what order block. So this is our order block on the 4 hours. So let's extend it to the right hand side. So what are we expecting now? Price tapped into this zone, gave us what a change of character at this point. So we now have what a change of character. So this is what a valid change of character on the 4 hours time frame. We have here as what a breaker structure. After having a breaker structure, this was what the last what high we were actually waiting for price to actually what come back to clear. So we are only taking note of the external range. So having this external range, this gave us what another what break to the upside before the price tapped into this zone. Now look at where a lot of persons get to make a lot of mistakes. Now if you look at this point, this was where we had the last break. At this point was where we had the last push to the upside. And where is the what zone that actually caused that push to the upside? This was the zone. This was the order block that caused that break to the upside. Now, having this zone as what the order block, a lot of persons were expecting price to actually what come back into this zone before what then continuing to the upside. So this is something they want to see. They want to see price what they want to see price come back into this zone and what gets to what continue to the upside without actually what considering what liquidity, without actually considering liquidity in their what setup. So okay, let me get to take everything out. Let me take this out now. So we get to actually what see what we'll have done different. So looking at this was the last low. So this gave us what a change of character to the downside. This gave us a change of character to the downside. After having this change of character, we already have in mind that what this is our 4 hour zone. We want to see price come back into. So here is what we have this place as what our relative equal what equal lows. So relative equal lows. So that's our relative equal lows. We have this point here as what we have this liquidity sitting at this point. So this tells you that what we are expecting what the market to actually what roll to the downside. So now we already have what this point, this high, this high sitting here, this high, and what? This low as our trading range on the 4 hours. So let's get to step down to if 1 hour to actually get a more precise entry. So I'll be able to actually explain or identify that what this is a change of character coming from what the 4 hours. So we have here as a change of character. This is what a valid break of structure to the downside. After having this break of structure, we have another break of structure at this point. So after having this break of structure, what do you want to see? This is what our inducement sitting right here. So this is our inducement, and you can see what we have this liquidity here. So coming down to the 1 hour, this will actually give us what a precise entry to actually what take this sell all the way to the downside, because you'll be able to actually understand that what from the daily perspective, we are what? We are bullish. We are still what? Bullish. But on the 4 hours, we are having a what? A minor retracement. So 4 hours and 1 hour is able to actually give us what? Us actually taking a sell to the downside. Meanwhile, on the daily, we are bullish. Let me get to take this chart back so you get to actually understand. That's why what directional bias is very, 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 very important. So you see, this is what the daily demand. So we are, provided we are still within this daily demand and this point, we are still bullish. But on the 4 hours, we are what? Bearish. So till this zone is taken out, before you can see that what we are bearish on the daily. So whatever we are having here is just what a retracement within this range. Within this range. So we are still bullish. So let's step down to the 1 hour. So we actually get to pick our trace setup according to what we've actually what be able to narrow down from the daily to the 1 hour time frame. So here on the 4 hours, this was the previous zone we had to mark on the 4 hours. So we'll be narrowing down to the 1 hour to actually what understand what GU is actually showing to us. So looking at this point, what can you see? We have this zone, and this zone isn't mitigated yet. We also have what price crashing down to the downside. This has been mitigated. So we already see that what we can't actually trade from this zone. This is not tradable. This is against our what rule of what change of character or what inducement. So we can't actually take a trade from this point. So what we'll be looking at for on the 1 hour time frame to actually what trade in the direction of the 4 hours is we'll put our what order block. So we have this zone. So this is what we want to see. We actually want to see this price what take out all of this what liquidity. You see, we have this liquidity sitting here. So we want to see this price come to clear this liquidity and tap into this zone. So for next week or for this setup, what do you want to see? We want to see this price pull back into this zone, and where is our first target? Your first target should always be what the most recent low or high. So this is what you have. You want to see price actually get to come back towards this low. So that's our first target. So now zooming the chart so you get to actually understand what we've just marked. Okay, so this is the chart. So we want to see this price what come into this point, and price should be able to continue. All right, so this is the zone actually we want to see this price continue into. So with this example, you've actually be able to understand what how we're able to scale down this chart from what the daily 4 hours down to the 1 hour. So overall, you can be what bullish or bearish on the daily time frame, but when you step down to the 4 hours, you get to actually what trade the smaller time frame within that range. So one thing you actually have to do is what identify what the trading range. So this was our trading range. to this point. So where is our trade setup? This is what the last supply zone we actually want to see. So you see, we already have what engineered liquidity, presence of engineered liquidity at this point. So we want to see the market come back into this point and what continue to the downside. So we'll actually what come back to actually look at this trade in what few days, to actually see if this actually played out or there was a violation. And if there was a violation, we actually want to see the reason behind this. You know what, you cannot be 100% what right in the market, but what we've just actually what explained in this chart, or what we've just actually studied in this case, is what trying to actually understand how the directional buyers work and how to actually make use of them. This trade isn't what 100% guarantee, or this is not what a financial advice for you to actually what get to place this trade, but the main purpose of this lecture was just for you to actually understand how directional buyers works and how to actually what trade within what a range, or how to actually what trade when you have your directional buyers. So with this, adding it to what your trade setup, your analysis, you'll be able to actually understand how directional buyers gets to work. So if this lesson was helpful, if you got value from this lesson, please let me know in the comment section, so that what this will help me to actually what create more educational content for you, so you will also be what one of the profitable traders we have out there. And if you still till the end, please do well to hit the subscribe button and don't forget to turn on the post notification. And lastly, do well to share this video with your community, friends and family, so they would get to actually what benefit from this content too. See you in the next one. Bye for now.